Welcome to the Southeast Retirement Planners Podcast, where we will go beyond the balance sheet with our guests, not only to share from our personal experience as financial advisors of over 25 plus years, but also to learn from our guests about the issues and topics that are important to them. Our firm specializes in taking care of the financial plans for individuals and small businesses by helping our clients identify their individual goals and taking a conservative and ongoing approach to helping accomplish them. We are located in Hickory, North Carolina, and look forward to continuing to serve our clients and our community. Thank you for joining us. We hope you enjoyed this week's episode.
Hello and welcome to today's podcast. I am Ryan Edwards with Southeast Retirement Planners. Myself and Les Stewart here today would like to welcome you, and we look forward to sharing a little information on a very important topic for many individuals out there, and one that's highly questioned, not only in its significance, its possibility of existence later on, but we're going to cut through all the talk and not get political here today. We're just going to share some good quality information on Social Security, and with that, I'll turn it over to Les, and we'll kind of get going for today.
Yeah, well, a lot of people don't know, and I didn't until I was told that this is Social Security Education Month here in April. So it's a good time a timely topic, yes. I guess. And it's something that we deal with quite a bit. It's a major part of people's retirement planning. Like you said, there's a lot of political questions around Social Security and how it's being used and who uses it, but that's really not anything that we can control with our clients, or discussing it doesn't help anybody that much on our level. So we thought we'd talk about some things that are useful to people out there. But something I learned in doing a little research is 42% of the average American earner's income in retirement comes from Social Security. So it's a big part of a lot of people's lives at some point.
And retirement income planning is that's one of our main things that we do for pre-retirees, retirees. And as you said, obviously that's going to be a big portion of their compensation. For sure. So before we get too deep into it, I want to tell a little story about, some of you may have heard this, but the very first person that received Social Security, her name was Ida Mae Fuller in 1940, and she was the very first person to get Social Security when the law passed. And she put into Social Security for 3 years and basically contributed $24.75. And what was her benefit?
So she pulled income until she died at the age of 100. And took out of the system $22,888.92. She won. Yeah, so that's a 1,000% return and a little change there. So not a bad return on her investment in Social Security. I don't think it works out quite like that for the rest of us, but it's a neat little story there.
I'd heard that whenever it was established, that there's all these stats that are out there, but the average lifespan for an individual whenever Social Security was enacted was 64.
Yeah.
So their whole thought process was that it was going to provide a retirement security, but people just wasn't going to live that long.
Well, and two, you and I have talked about this in some of our presentations to clients and different people, but the system was developed to basically shut down what was called the poorhouses then, and so there was a problem back after the Depression with elderly people that were no longer capable of working, didn't have money to live on, so they were basically pushed into these housing areas where they just basically went to die, and that's not good. And so that was one of the thought processes is to keep that from happening by giving them some sort of income. So anyway, that's just a little history about it. Let's talk about how it exists now and how to use it a little bit. Yeah. So
do we want to cover the website that's best?
Let's go to that slide there.
Well, I always kind of hesitant to say, but until you look at it, one of the best resources to gain information on Social Security is the actual SSA.gov website.
Absolutely. And I actually took some time and logged in myself and entered my information in and got set up my Social Security account on there, and was really impressed with the information, and I'm nowhere close to needing Social Security yet at age 46, but it told me, what my wage history is, what they're using to count up the, how much I should get if my wage stays the same where it's at right now, and then there's also a little tool on there that you can use to estimate, if you anticipate your wages going up, you can
do a projection.
Right.
Yeah. So the average, the income history, which is helps explain how much you'll receive in Social Security later on. It's your lifetime income. Generally, Social Security takes into account the highest 35 years of income.
Right.
In determining that benefit.
Right.
And that obviously you haven't been in the workforce for 35 years in terms of paying into Social Security or thereabouts, but nonetheless, even if you worked 50 years, it's your highest 35.
Right, that's how it's determined. You've got to have 40 credits to be eligible, and the system they have has to do with years of work and that kind of thing. But it's that 35 years is a key to the amount you can take, and then there's a top end amount.
There's a top end amount that you can't exceed.
Right.
So if you're a high income earner, there are limitations, and then there's also limitations you may put on yourself, and that's in terms of if you take it early, if you determine to take when you start your benefit, and you're able to start a benefit as early on your own benefit at age 62.
Right.
Now, another thing that before we get into that is FRA. The acronym stands for full retirement age, and that's gridded out, which it's based off your year of birth. And let's just say, for example, if you were born in 1960 or later, then your full retirement age is age 70. But if you were born back, say, when my parents and your parents were born, then their full retirement age is age 66.
Yeah.
So it is. You can find all this information on SSA.gov.
You can, or do a quick Google search, or you can go down to the Social Security office, and if you want to torture yourself, that's probably
we've done that before.
Yeah, and no disrespect to anybody that works in that, but it's it's been we've had plenty. We've actually walked in there ourselves, and we've had several clients that talked about how it's just it's overflowing, and
we'd encourage you to make an appointment ahead of time so you can have a level of privacy, and not have to wait, and feel like you're in a
but if you're able to use the computer and get on SSA.gov, it answers just about everything. Between that and asking the right people some questions, you should be able to get most of your answers there.
So there's three time periods when Social Security is talked the most about. Earliest at 62. One's full retirement age, which we just went over. That differs based off your year of birth, and then age 70, which is when you should start at the latest taking it out.
So if I wanted to start my pulling my benefit, let's say I was age 62 and kick forward, I would get 70% of my full retirement benefit, which is
and that would increase. So, like, if you're not ready to hang it up working and you wanted to maybe work until 64, then in that regard, you would have a little bit. You would actually, your benefit wouldn't be decreased by that much. You would receive a little bit more than 70%, but not 100% of it.
Yeah, it's all about the time you decide to turn it on after age 62.
Right, and then that gets into some calculations, which we go through as we flip the slide, and we go into some situations that may come up where a spouse has been working, and maybe one of the spouses stays at home and hasn't received that many credits.
Right.
They're able to.
Yeah, we see that quite a bit, where one spouse has a dramatically different earning schedule for those 35 years, higher, and the other one may have none, or a lot smaller ones. There's some decisions to be made.
Right. And that, if one of the spouses is at full retirement age, then the spouse that doesn't have those level of credits can get up to 50% of the higher earner spouse's benefit. And then if it's below full retirement age, it could be anywhere between 32 and 50%.
So if I'm the lower earning spouse and my Social Security benefit is lower than 50% of my higher earning spouses, then I could take the best of. That's basically how that
works.
Yeah.
Exactly. And that there's been a lot of rule changes to kind of filing some things that used to be apart, file and suspend, spousal benefits, restricted applications. A lot of those changed about 6 years ago.
Yeah, it kind of simplified everything. I don't know that it was you can debate whether it's for the better or worse, but there's less options, I guess, that are available.
Yeah, and we used to talk, we could have a very long podcast before 6 years ago, but nonetheless, a lot of the considerations we have to take into account are individuals that they want to know, how much can I earn, get from Social Security while still working?
Yeah.
Or how much am I going to be taxed, or how much is my benefit going to be reduced?
Right.
If I'm working before full retirement age. Now, I guess let's back into it. So I'll just start. At full retirement age, you can make as much money as you want and not worry about being penalized.
Right. You can be taxed. You will be if you cross the threshold of earnings, which we'll talk about.
Yeah.
But
so full retirement age, you don't have to worry.
That's right. But we have a lot of people that just think. I hear this all the time, and not to make fun of anybody, but I may not live long enough to get much Social Security out, so I'm going to take it. Well, that may be the right thing for you. It may not be to take it early at 62, but once you turn it on, it'll increase with inflation, but it's not going to increase, to the full retirement age benefit.
Correct. You're locked in.
To that level. And so with that being said, if you happen to not stop working and you turn it on, then you could see your benefit, even the smaller 62 level benefit, reduced in that case. And that can be, I think it's after you get $18,000 I see here?
Yeah, it's from age 62 to full retirement age. The maximum amount before you start getting penalized that you can make is $18,960. Right. And what that means, what's a penalty? It means that your benefit's gonna be reduced from Social Security. You're gonna lose $1 in Social Security benefits for every $2 you earn above that $18,960 limit.
Right.
Now there's a little tricky thing that the calculation comes in. Like, what if somebody turned
full retirement age
in October?
Yeah.
And they've worked.
Right.
Well, should you wait until the next year or what? I mean, if you in that year, the number does go up from the 18,960 to 50,520. So there's it's not as easy as just going and filing. You want to know that ahead of time.
Yeah, and that's not to say but don't automatically think that just because there's a deduction, it doesn't make. If you're capable of working and want to work, you're probably going to be better off working a lot of times.
Make more money
than the reduction. And there's maybe a little fine line in some circumstances, but that's a pretty easy calculation to have with somebody. You come to some guys like us or an accountant, and they can do some projections for you to help you make that decision.
If you got a good earning job, I mean, and it's probably stands, I think, is to, really pay attention to it, but not getting yourself in a situation of reduction of benefits. I think. I mean, it is a calculation though, so I can't make a broad stroke.
Right.
You got to really just do the calculation for yourself. Don't listen to your buddies at the liar's table, at the breakfast table, I'd say, or at the water cooler.
Yeah.
Each individual is different. But with one question we also get quite a bit is, okay, if I am working, and let's say, this really comes into play for individuals that are receiving their benefits at full retirement age, and they, hey, how much am I going to be taxed on my Social Security? Right. So we've got a chart up here that shows you if you're single or if you're married filing jointly, what those numbers look like. Now, it's very important to note, let's just say that if you're married filing jointly and between you and your spouse, your income, the amount of your income exceeds $44,001. That means you're going to be taxed on up to 85% of your Social Security benefits. Right. That doesn't mean that the tax rate is 85%. Right. That just simply means that you're going to be taxed on 85% of your benefits. 15% of it's going to be tax-free, and then you're just going to have to pay the going rate of whatever your tax bracket is.
And another thing to remember, too, is how you come up with that income level. So it's the formula's up here behind us, but it's your adjusted gross income plus your tax-exempt income that some people have, some people don't have, and then half of your Social Security benefit. So when you add all that together, then that comes up with that income calculation that then you determine where you fall in that taxation of benefits. And if it's below $32,000 for a married filing jointly, you don't owe anything on your Social Security tax. We find that a lot of people fall into paying a little tax on their Social Security, and what that means is, well, nobody likes to pay taxes. That also means you've got a higher income to live on. So it's not as if you're subtracting by taking Social Security, you have less. You still got more money.
Correct. Right? Yes, exactly.
But there are some tricks that you can, or not tricks, but being smart with how you pull money out of your IRAs, or take different types of income from your investments and that kind of thing, and timing can help you avoid paying some taxes on that or delaying it to a different year or something like that. And that's something that you need to look at when you're considering taking Social Security and taking money from your retirement accounts.
Right. So I guess, Les, unless you know of anything else we really need to cover, I don't want to get too far in the weeds with this, okay?
No, we're just kind of being high level. It, but
I think we've already uncovered quite a few things. Those are the major topics that people need to be aware of, and let's just cover a couple next steps that if we could kind of. You may leave this conversation or listen to us talk today with a number of different questions, and I would just encourage you to give our office a call or speak to a trusted person, CPA, or someone that knows what they're talking about.
Right.
I'd encourage you to go on ssa.gov.
I think that's your number one resource. At least set up your account so then you can pull the information to have a good discussion with somebody about your stuff.
You may, in our situation, we're going to work as a financial professional to help you get those answers. Along that way, we may need to interact, as we do with our other clients, in discussions with a CPA or a tax preparer, then an estate planning attorney or any qualified specialist that we need to. We're going to kind of help quarterback that whole entire situation. We can run the projections, look at the different scenarios, and this is a core, just integral part of the retirement income process.
Right.
So we sit down, and it would be good for individuals as well as when they're thinking about what option's best for them and looking at what their income, a happy retirement equals good cash flow.
Right.
If you've got the money coming in monthly or yearly to do the things you want to do to keep your standard of living up, that usually means you're got a pretty good retirement.
Right. And probably, ideally for most folks, you don't want the majority of your income to come from exclusively from Social Security. You want to have prepared and saved up until that time. And, you know, that's part of what we want to do in the planning process is help you set those goals and take the steps to reach those goals as time moves along and you get closer to that Social Security type age, and then, you know, make the decision at that time based on where you're at and, you know, what your savings will be to give you the best benefit to do what you want to do in retirement and reach the other goals you have, whether it be passing along money to your kids or the next generation or helping someone out there. There's a lot of things that go into the planning process, but knowing getting the most out of your Social Security benefit and timing on that is a key part of that.
Right. In a situation where an individual would come into our office or we're working with an existing client, we're going to ask those questions.
Right.
And we're also going to, for individuals we don't work with, but maybe they're finding their way to us as they're having these questions come about or looking at retiring and maybe have some assets to roll over. We're going to ask about what types of accounts you have, both retirement and non-retirement, because those are going to play in from a tax standpoint as you look to distribute money, maybe to supplement your Social Security.
Sure.
And once we determine what all different incomes an individual may have, yes, Social Security, employment, will they continue working or not? Is there a pension? There's not a lot of pensions out there now, but there may be.
Still see them every now and then.
Yeah, that's right. You know, rental income, is that something? But then we need to figure out what your expenses are. Do you have a mortgage? A monthly budget, you know, including food, Medicare premiums, taxes paid, car payments, any vacations or travels, and then just do the simple. Right. Hopefully that income exceeds the expenses each month, or we're going to have a tough conversation about continuing to work or doing away with one of those things.
Sure.
And so that's kind of the process that we go through, and therein lies the ability to find out what your total retirement income, total retirement expenses are, and then how much is needed to supplement. So we believe in making sure that you pay as much the tax you're supposed to pay, but I always say don't be the best friend of Uncle Sam.
That's right. That's right.
And we're recording this a few days before tax time, and it's something on everybody's mind. For sure.
Oh yeah, for sure.
So, you know, there's other things that SSA.gov can come up with, not only on retirement, but also in things associated with disability benefits. That's a whole nother topic, but just to let everybody know, you know, disability, Medicare,
survivor benefits. That's
correct. And those are other items we haven't covered today, but just so they know, those listening or viewing know that that's a resource for them as well on those topics.
Right. It's all in there.
We've covered a lot.
Yeah, I think it's been a useful topic, and like I say, it's just a kind of a high level overview. But we're here to answer any questions, or you may, you know, if you have a trusted advisor, make sure that you understand fully what your Social Security benefits are and the options with it, and when the right time for you to take it is, and how taxes factor into that. If you've got all that covered, you're probably on your way to happy retirement there.
Yep, that's right. Well, we appreciate you joining us. Once again, I'm Ryan Edwards, and this is Les Stewart. We're happy that you joined us on the Southeast Retirement Planners podcast, and we look forward to your questions that you may have, and you're also viewing or listening to us in the future. You can find out more about us at our website at seretirementplanners.com, or we offer anyone that doesn't currently work with us a complimentary financial checkup, a 1-hour visit together that you could also call and set up a time at 828-855-2067. All that information is online on our website, as well as a recording of this podcast and others that we've done. So we thank you for your time, and we look forward to talking to you in the future. Thank you.
Thanks.
Securities and advisory services offered through LPL Financial, a registered investment advisor. Member of FINRA, SIPC. Southeast Retirement Planners is not affiliated with LPL Financial or registered as a broker-dealer or investment advisor.